Hello and welcome to this very special pre-budget panel that we have with us today, and we're calling it What Markets Want, because we've come to a time when every morning you want to check in on what Asia is doing, how much crude is, and before going to bed you're checking what US markets are doing. But we have a very big trigger in our own domestic macros called the Union Budget coming up next. So let's find out what the market really wants. And two extremely eminent gentlemen joining us today on the panel, that's Manish Chakhani as well as Raamdeo Agrawal, to make sense of this madness going on across the globe and where does India lie in the piece of the pie. Gentlemen, thanks so much for joining in. Manish, let me start off with you. How critical is the budget really? Because like I just mentioned, there's China, there's crude, there's Grexit, there's Brexit, there's US. What can the budget do?
So, well, the funny way to think of it is there are a lot of rich uncles and aunties in the world who are in, major trouble. And our doctor is going to come and visit us. And you can only hope he doesn't give us a dose of stiff medicine that day. But other than that, you're going to still keep looking, come 1st March, you're going to look what's going to happen rest of the world, will the flows come? Because eventually markets run on weight of earnings. And that earnings are going to be, in a funk because of what's happening in rest of the world, at least externally. And you really run on sentiment and you run on liquidity. There is no liquidity. And sentiment isn't going to turn on a dime irrespective of what we do in the budget. So
and there is no growth
a tough
either.
Space, yeah.
So just another day, it's not going to be anything market.
Yeah, great television.
Certainly. Yeah. No, but Raamdeo, is this budget more about, and before we get to specifics, is this budget more about what the markets don't want as opposed to what markets want?
No, that's a very small portion of the budgetary exercise. I mean, though, since we are in financial markets, probably we might be very keenly looking for that one line where the capital gains tax is 1 or 3 years or something like that. But I think the larger thing is that what kind of vision the finance minister of this government has about kick-starting the investment in this economy. I mean, all kinds of constraints are there. Fiscal economy is not growing, so revenue is not growing. There is no tax buoyancy. There is a constraint on the fiscal deficit you can have. You have a very watchful central banker, rating agencies. So in that situation, how do you wriggle out? And yet you have to kick-start, and nothing can kick-start unless you put a few $100 billion. And that's where the imagination of this finance minister and how he carves out from a very small 1 acre plot, how does he make a 100-story skyscraper?
But, I was, sorry, just an extension. We would typically never start a pre-budget discussion with a tax question, but the market is just so spooked about whether long-term capital gains tax is going to come or not. What could be the thinking behind? Whether it comes or not, we'll find out on the 29th. What could be the thinking behind it? And could that really derail an already grappling market?
No, I mean, pre-budget you can keep asking some crazy things and, keep imagining crazy things. I think the best thing, because we don't understand how Delhi works. I mean, at least I don't understand how Delhi works. Whether it is rational or irrational, that also I cannot say. Markets are definitely irrational in the short term. Okay, so two irrationality is like irrationality squared up. So let's be cool, watch the budget till end and see, you have to look at the total package. If I wish they abolish the dividend tax altogether. Double tax and dividend has to be abolished if you really want equity markets to fire up. Fire up means, see, you are in a FI trap. This market is in the trap of FI.
Sure.
You have handed over disproportionate portion of the market in their hands. 20% of the equity and 40% of the floating stock. Now, so they determine the trends, and they're not dependent. Their allocation is not dependent on what happens in India. Their bulk of the allocation is depending on their view of the world, which at times doesn't look that bright, and hence, you see last 3 years you got a lot of money without asking for it. You didn't deserve to get anything. You got $100 billion. So it will go when you deserve.
Well, hope
so how do you create a counterforce? And that's, these are thoughts I would like to see in the budget, at least thinking, if not action.
Okay, so that's one point that is out. The other thing, and I think a lot of focus is there on that number, the fiscal deficit number. And Manish, the question really is that whether the trade-off, everybody knows the trade-off. The question is whether he goes ahead and sticks to the given target, because it's also a question to a lot of people about credibility of what they've said and whether they stick to it, or they actually just loosen the springs a little bit because they need to bring in that much desired consumption growth.
So, think of our government as a, indebted company. And therefore, there was an EPS forecast put out. And now question is, do I miss the EPS forecast by 5%?
I feel like I'm in a classroom.
Or do I miss it by 20%?
That's a disclaimer.
And in what manner is the miss coming? Because if you look at the way a rating agency or the bond markets or currency markets will look at this, they'll say, you guys got a windfall from oil this year. It's not like there is not a crisis in India every other year, and therefore there's every other year an excuse to let fiscal targets slip. But reality is when you look at consolidated fiscal along with state and center governments and public sector, we're already at a 6-7% of GDP number. So it's because you'll put the Uday Commission burden on the states, and the bond markets have reacted to that already. Then you will also put the one rank, one pension. You will also put the seventh pay commission burden on it. So the revenue expenditures are going a bit crazy. And reality of life is the central government accounts for 1% of GDP in terms of capital expenditure. 1% is their capex, 0.8 is the capital expenditure of defense. So 1.8 is the total number which comes out of his budget. 1.8 in a country which has an investment rate of 30%, even if you move 2 decimal points here or there, it's not going to really move the needle. What you're seeing though is instead of then asking the public sector companies to also kickstart and start investing, the opposite is happening, that let's do buyback, let's get dividend so that my balance sheet improves and forget what happens to the rest of the country. And I completely agree with what Raamdeo is saying, that if you looked at this government as a company, you would see that the debt number to their revenue number is 5x. Debt to GDP of the central government is close to 5x of its revenue. The interest cost which they pay is 35 to 40% of their revenue. If you look at it in that context, you'll stop disputing this 3.5 of GDP is a bogus number. You should say my loss is 35% of my revenue. In that situation, what you do is I have to sell assets. I don't care about the political reality. I have to go down the path which the Vajpayee government did very successfully and rightly. Because every asset they invest in, MTNL, BSNL, Air India, Doordarshan, one after the other, you destroy value. Why are you holding on to it?
That's a remedy, but a quick 30-second answer. So does he stick to the FISC number because that is what everybody will look at? Or will he loosen it and go ahead and...
So, like I said, how is that FISC number coming? If it comes by manipulation, and anyway, at the end of the year, what is promised and what comes out are, two different entities. So it's like a kind of IPO prospectus. This is the promise to the investors. Markets will react to that. If the capex number goes up, if the bank recap number is much higher, and dispensation is made for that, I think people will be happy. But if you reach a 3.5 number and say bank recap is a measly 10, 20,000 crores, capex number is 10,000 extra on roads or bridges, I mean, come on. This country needs a lot more action than that.
And that lot more, Raamdeo, is growth. Does he really have the bandwidth, the elbow room to revive consumption in a big way?
You need imagination. See, anything is possible.
Does he have it?
No. See, it's a large country with a lot of possibilities. You can sell assets, you can get foreigners to invest, you can excite Indian investors to push them away from the gold to equities or bonds or whatever. You can unearth a lot of black money in India and abroad. People say it is running into trillions. So there are a lot of options. What do you want to do? How much you are empowered, how much you can imagine, and how much you will act at a given point of time. See, they are masters of public finances. We are not. We are corporate guys. So we think in terms of few $1 million, few $1 billion here and there. They have to think in trillions now. It's a very serious exercise because this is a game of money. This economy is not going to move. This is a $2 trillion economy. If you want to really make a push in a headwinded environment, you need to really give a lot of push in terms of investment. And that can happen only with the money. Either there are only 3 guys who are to invest. Private corporates in India, corporates from abroad, or government itself. Okay. Private corporates, they are doing whatever what makes sense.
Just before we slip into that break and trying to restrict this conversation to the purview of the budget, Manish, do you think, a lot of things will happen in the budget session, which probably will last until April, May, but do you think there could be key commentary, or would the market be hoping for some key comments being made on the bankruptcy code, on the GST, so on and so forth? Are these words that the market desperately wants to hear?
Yeah, I think not just the words, but the belief that these will actually get implemented. Because you can
Is the budget the forum to do that?
So some of this nowadays has become a lightning rod, and you don't therefore want to necessarily attract a lot of attention. And in some sense, one hopes that it's not such a spectacular budget that the whole opposition decides to gang up and sabotage, the ruling party. So really the best way to approach the budget is to keep expectation low, hope he doesn't disappoint, hope he doesn't put some more poison into the system, and they play the structural game which they have been playing smartly by devolution of power to states, getting DBT directly into people's hands and getting the government out of all of that. So directionally the moves which are being made are right, and as long as they stay that course, I frankly don't expect anything spectacular to come, knowing the players and the political realities involved.
Under promise and over deliver.
Yeah.
Hopefully that's the case. But time for a very quick break. We come back and continue our conversation, try and nail it down to some small specifics as well. Well, back with this pre-budget special, What Market Wants, and in conversation with Manish Chokhani and Raamdeo Agrawal. We've gotten the broad painting. Now I'm trying to fill up the key dots or the key pockets from the market's perspective. And Raamdeo, let me start with you. One key thing that everybody in the markets want is some more commentary and color on capital infusion for public sector banks. A small measly amount was laid out the last time. Obviously, that's not enough. And now the banks are in dire need. It'll have a multiplier impact as well.
Yeah.
Do you think there is scope for that, this budget?
See, it's not only about the capital. I mean, the problem is too deep and too important a problem. This is not a Akashvani. Yes. This is banking system of any country. This is 70% of the banking system. It's completely today broken down in terms of capital adequacy and the way it is functioning. So one is, of course, capital. That's the first starting point. But after that, what is going to be you have stuffed the past problems, but what about the new problems? How do you run it efficiently? How do you raise the quality of operations straight up? So all that roadmap has to be clear either before budget, immediately after that, but that's the biggest thing happening right now. So we got to get not only about the capital, that's the bare minimum, whether they are giving, what is the game plan for recapping? Second is, what is going to be the reforms in the management structure? How do you install a brand new management out there in all the 26, 27 banks? It's not one or two or three. So I think those things will really matter. And if you get good manager, do you want them to be there for 5-10 years?
Yeah, I think that's been something that a lot of people have been hoping for as well.
Manish, but just on rural demand as well. I mean, could he say anything on that? Because Europe as well as 7th Pay Commission have sort of somewhere taken care of that already.
So, the reality is the rural demand is a function of what the state governments do, because the whole irrigation spend, the whole power sector spend really goes out of state government balance sheets. It's not really a central government issue. It makes for dramatic headlines to say we will put a Narega program or we'll give 30,000 crores for, irrigation. But the numbers, if you think of it, what the states do, there is 4 lakh crores spent on education in this country every year, in theory. Now, you know what the quality of the output which comes, because even when we are hiring for the Infosys and Wipros of the world, from the most prestigious institutions, we say we need to put them back for 6 months of training. So there are big black holes in expenditure. So it's not about the outlays, it's about the outcomes. And I don't think any government stands up and shows what the outcomes are. At some point, people used to disdainfully talk about the Narega program as, digging holes and then covering them up. And then suddenly virtues have been discovered even in that let's use this money now to start going and building rural roads. So it's really like Raamdeo rightly says, it's what is the architecture of the country we want to do, rather than, these worn out phrases, oh, I will do this for rural and I will do this for urban. It's like the political debate that do you do things for minorities, do you do things for the citizen? So I don't think the rural side is a rural side anymore, because 10% of the GDP or 15% of GDP is now agriculture. The rest of it is really small, self-employed people in those areas around whom towns are forming. So the country is urbanizing and the government is still pretending that we have a rural countryside, waiting for monsoons, waiting for agricultural prices to lift off. That's not the reality anymore.
Yeah, but having said that, the idea is to try and figure out, these structures are very much necessary and welcome, but maybe not going to be announced on Feb 29th. What might be announced is essentially the kind of outlays that he might be able to give.
That's the point here, that if we keep doing mathematics and moving 2 decimal points here and there,
Fair point.
like I know I was joking earlier, but I'll give you an illustrative example of our tax code. It's so elegant and beautifully designed. Now, related to a real life example, let's say the two of us come down on the Worli Bandra ceiling, and at the toll, instead of saying pay 80 rupees or whatever and go, if they start measuring, if your car is more than 4 meters, pay 90. If you have more than 2000 cc, pay 102. If you have diesel, pay 130. What will happen? You will have a traffic jam on the expressway. That's the state of our country. We're in a permanent state of jam because all we're doing is figuring out who has to be paid how much and how long do I have to take so I can start moving in life. That needs to get simplified.
Yeah, the Bandra-Worli ceiling brings me to my next question. Taxation on diesel, the government seems to be heavily coming down on that, and there seems to be this big thrust on renewable clean energy. Do you think something will actually come about, something decisive will come about, and would be beneficiary or non-beneficiary, as it may be the case for diesel car manufacturers or people who are into clean renewable energy?
I think the bigger issue is that what's the assumption on which this budget will be built, whether a $40 oil, $30 oil or $60 oil. Because this year's budget is saved, or 15-16 is saved because of bountiful tax collection on oil. Now if oil reverses, will he give it back? What is the assumption? Because it's a very temporary. I'm quite sure that this is done by Saudi Arabia, he will take it away. In 15 months they've given it, 15 months they'll take it away, the demand comes back. So clearly you are in a very, if the growth doesn't come, actually they have given, Saudi Arabia has given us time. Boss, kick up your growth quickly. There's a small lunch packet we've given you, So you start earning. And so by chance oil reverses $60. And if the budget is built on a $30, $35 assumption, that money will keep coming. You imagine what kind of disaster we'll have. At the middle of the year, we'll find that we're not getting those dollars.
Yes. I'll just put some context. I'll just put some numbers. The oil windfall is 1% of GDP, which has added to the excise collections. That 1% windfall, if it had gone to the consumers in India or the producers in India, hopefully we would have multiplied GDP. What we find is 1.4% of GDP is now going to go through the 7-Pay Commission to across the board, and I'm not saying it's not a required thing, but that is now the stimulus package. That is the growth. So we have taken the oil windfall and given it to the 40-odd million center, state, public sector, teachers, doctors, all that in the country. And therefore we are hopeful, come August, September, when that money starts finding its way into their pockets, you start seeing some revival of consumption.
I'm such a small minority here, but almost everybody says that it should have been passed on to the consumer, to people like you and me. I'm saying it's okay, it's gone to people who actually need it slightly more than what.
As well.
Yeah, precisely.
Because the government is the largest employer in the country.
True. Okay, so then as we draw down this discussion to a close and trying to focus now squarely on the markets, is the way of approaching investing in this market, and probably similar questions to both of you, Raamdeo, to you first, is the way to approach this market, is the purview outside the budget? Don't look at the budget, just look at the budget as a statement of accounts. But, this will not do anything but for a day's move. A lot will happen beyond it.
There's not even 0.001% of the entire investing process. Budget is just another event. You don't invest because there's going to be budget. There's going to be 10 budgets in 10 years. For sure. So you can't be changing, and there will be 10 new finance ministers and prime ministers and all kinds of world will come. So clearly investing is well beyond that. It is not even in the...
No, I mean investing at the current times now.
So I am telling you, because of budget, nothing changes. If I want to buy today, I'll buy. If I want to sell something, I'll sell. That's what I'm saying.
Okay.
Manish, status quo for you as well? You're in sync with him?
Look, if something can be affected so dramatically by the budget, it surely deserves a low multiple because it can be changed in the next budget. And therefore, if you look at wealth creation over 20, 30, 40 years, I don't think FMCG companies, pharmaceutical companies, IT companies, auto companies, they have not sat and held their breath over what's going to come in the budget or not. It's always been the policy-dependent sectors which, hope I'll get some concession here or I'll get some extra allowance over here. It's not about those sectors haven't been wealth creators for generations, so it's not likely to change, this year as well.
What is the biggest factor right now which you think is dominating world markets? Would it be crude?
No, world markets is, actually the world is, frankly, they're bust. The fact is there is too much debt in the world. India is, I think, exaggerating its problems. Our debt to GDP of the governments is 70% of GDP. US, Japan, all are 350% of GDP, and there's no growth and there's nothing. So It's a whole scam going on that these guys are printing trillions of dollars and our currency is falling. So that's a debate for another day. We don't know how to market our own story and take all this money. There's $3 trillion in government securities at negative interest rates. If our government cannot imagine a way to attract this money and say, here, take this road, take this bridge, we'll give you 4% return on it, bring $100 billion in. That's the way to go about it, exactly what he's saying, be imaginative. Because there's no option, this country will have unit volume growth. It's like he said, if you have to bet on will motorcycles sell more, will cars sell more, of course they will. That's the bet to take, and whether there's a good budget, bad budget, FII comes, FII doesn't come, like we always say, when the vajan of profit will come, the price will follow.
No, so to be fair, they did try to do this, right? The disinvestment target was fairly high. That they didn't go ahead and manage it. I mean, compared to what's happened.
I just want you to just take in context. It's a $2 trillion economy.
No, I said
you have $1 trillion of debt, and you want to do $6 billion of disinvestment. Come on, you're just trying to match your interest payment. The interest payment is 3.5% of GDP.
See, you have...
So what? It's like shocking the smallness with which we are approaching our issues over here. It's a time to go and just loot the world in a way. Instead, we are getting badgered and beaten up by the world.
You want to add to that, Raamdeo?
Global economy is $77 trillion. Upwards of 20% is annual savings. Those jokers, they don't know where to put the money. It is going below base rate, below negative. I mean, and now the discussion, if you read FT, what they're saying is that this 0.1, 0.2 negative is not good enough. We must go deeper negative.
Absolutely.
Sure.
Now, can you imagine? Here at 12%, we don't get money. So I think there has to be a lot more thinking. I'm not good at global macro and local macro, public finances. They are very different, very sophisticated subjects. But then the guys who are good, they should have that imagination. I mean, this is very clear that there is a huge amount of money lying there.
Sure.
They want to come here also. We need to prepare a situation which Mr. Modi is trying very hard right from day one to create a very conducive environment whereby billions and hundreds of billions flow into India.
Come into India. Cool. Okay. Having said that, as we wrap up this discussion, the reason why I bring this question back again, and just, Raamdeo Agrawal, Manish Chokhani are investors who probably invest right now. If the markets were to correct 10%, they will probably go out and buy more. They won't get ruffled. And they will hold the story for next 5-10 years. But there is a set of viewers who probably cannot do that or don't do that. They might be slightly shorter term investors than you are. They might be more tactical than what you are right now by virtue of whatever it is.
I hope you are not referring to the speculators.
No, I'm not referring to speculators at all.
Yeah.
So here's my question, Raamdeo.
Yes.
The question is, if indeed there are some measures taken which could lead to a correction in the market and therefore it gives a better tactical opportunity, and which is why my question, that do you foresee that if indeed there are these decisions taken with regards to capital gains tax or a service tax being up 2%, so on and so forth, it results in a fall in the markets and therefore probably gives better entry points to people. So do you think that will happen if indeed the measure is taken?
I told you in the beginning, if I want to buy today, yesterday I got my dividend, I bought it yesterday only. So, 100% I bought it till 4 o'clock.
Sure.
There's nothing left. So this is a honest statement I'm telling you.
You will disclose what you bought.
No, I bought my own products, F30, F35 and all. But what I'm saying is that I'm not timing the market at this level.
You're not timing.
Yeah.
Manish,
That's the fact of life, that you get a stock at a price you like. Who are you waiting for? Nobody's going to come and ring a bell and say, please buy this today.
So the budget is irrelevant when it comes to the investing process right now.
As far as I'm concerned, yes.
I hope
Just
so.
another day.
Just another day.
We hope so.
But good TV.
Yeah.
Let's qualify that. Anyway, gentlemen, thank you so much for joining in today and giving us your thoughts. Really good having you. Okay,
Thanks.
and I hope that gives a little bit of support to the hearts of investors, because all of them are shaken up right now. People likening this to 2008. Hopefully it's not as bad.
Yeah, Tuesday morning we'll be back to tracking US and crude, right? Okay, wrap it up then in this edition of Budget 2016, What Markets Want.